All right. Good morning, everybody. Welcome to another Engineering the Markets. My name is Jared. It is Tuesday, October 4th, 2022. So happy Tuesday to everybody. Hopefully we enjoyed yesterday's open into a new quarter, a new month, and obviously little bit of a counter move relative to some of the downside we've been seeing recently. Fairly significant rally, both in terms of where the market closed and also the gap up open this morning, which we'll talk about in just a moment. Wanted to have the SPX expected move, upper and lower bounds marked for today's session. So if anyone missed yesterday, we didn't actually have these drawn. If you need them for this week, 3708 is our top side, 3463 is our bottom downside. We did close at 3585.62 last week, so it was a very bearish close overall, and that was when we were actually looking at breaking the June lows. But as you can see, even with that single candle and the high volume that we got at a very important low, the market instantly reversed and set up essentially a false low. At this point in time, we'll run with that assumption from a technical standpoint until otherwise disproven. Another important note yesterday is based on how far we moved, the SPX is not doing a great job at handicapping the actualized volatility this week. You know, if you're looking at a weekly expected move and your market moves that in about a day, especially on the first day, you know something is a bit off because it doesn't take much for the market to tip over those areas and obviously see a little bit more gamma risk. Now, as always, expected move is about where we close on the week. So there's still time for us to come back inside the expected move, even though we are gapping slightly out this morning. But it's notable to see that we've already had a breach. And no matter really what happens today, as long as we open somewhere above 3708, we can classify that as a breach of expected move. And we'll kind of see where we close today, along with the type of pressure bulls want to give to this downtrend. So before we get into our main topic, I'll mostly just say that yesterday was a very highly correlated type of day. You usually don't see significant bottoms being made on heavy correlation without a little bit of structural support. So understand that we could be inside of our normal balance range that we've traded ever since last week. You know, that 10-day, 30-minute really showcases the type of volatility we've been seeing. And there are some notable levels here. The 370 is very important. If you recall, 368.8 is kind of the inflection point when things go from bull to bear relative to the range. And then, of course, the 363, which we've seen a couple of downside breaches, but until Friday, we had never really closed below it. Hence why getting back into low to high trading was so important yesterday due to the volatility of the upside. We actually saw a full balance range traversal, and we saw it from a false low against a known support area. So very powerful kind of counter move, maybe a little unexpected to newer traders, but also something we've seen before. You know, the movement here is no dissimilar than a session like this. It's the same relative percentage. It's mostly about where we're located, somewhere near these lower bounds, and then coming into the upper bounds as targets. And it's just that same back and forth trade until we break out. And of course, today is that question mark of, are we ready to break out of balance? Especially now that we have such a significant false low. So that's where we'll kind of leave today's discussion. The reason being is for today, I wanted to look a little bit more historically at some topics of discussion that were covered a couple of months back. And for this discussion, we're going to be looking specifically at the S&Ps back in 07, 08, and 09. So for this, we're going to use just a comparison chart. And what I'll be using is a 3-year aggregated over the daily. The reason being is 2008 was comprised of an all-time high made in 07 into an absolute low, the bottom of the financial crisis in the early months of 09. So I definitely want to capture as much of that data as possible, and then we'll zoom in when it's relative to a discussion. So I'll bring up the SPY here as well. We'll take off all of our studies just to look at price at the moment and volume. And then I'm going to shift my time frame to mid 07 into basically all of 09. I don't really need all of 09, but I did want to just kind of capture the recovery as well. Now, where has our discussion of the 2008 correlation really begun? I think a lot of the discussion started as soon as we started to break trend. And arguably the trend break that I'm referring to started pretty much after an all-time high was established. If you're looking at a study, it's approximately when we started to see our moving averages no longer acting as support and starting to curl against the price. 20 and 50 are going to be your short and medium term trends, but more directly, when we lost the 200, I think is when a lot of people started to look at the current price activity now, and I'll bring up the same studies here, and start to make these types of comparisons. You can really see when that moment took place and compare it to the beginning of 2008, because price has a little bit of a structural similarity, especially with the new drawdown and correction of the market at the time. Now, if you joined Engineering the Markets somewhere around, let's see what day this actually was. Looks like it was approximately July 16th. You know, I'm not sure if it was that exact day, but I certainly was talking about the 200 period at that time. If you joined us during that time, the discussion was essentially similar to what we see now. 200-day moving average is such a strong moving average that if the price were to reject it, not only is the risk back to the downside, but in an equivalent sense, this could mark another very significant pivot, basically a high that's going to be set for a long time. Along the way, as we started to pull back in from these levels, and I'll start to zoom in here just a bit, there was this potential area of interest. It was an area where weekly bulls could have set up something like a weekly higher low and essentially captured the price, held some sort of range support, which we did break out from. And this was kind of the discussion at the time. 390 was an important price to hold, you know, especially as we are simply trading back and forth in a much larger bearish channel. You know, for clarity there, this is not going to be the perfect channel drawing, but it should be kind of similar to something like this. Whether you're anchored from the lows or if you're anchored from the highs, probably more preferable since it is a bearish channel and the confluence is much stronger at the highs. You'll see these types of channels in the NASDAQ, the SPY, and ultimately they're just kind of marking where pivots tend to form or where the risk is highest relative to a long and a short. These structures are not dissimilar from back in time. Now, obviously, I'm kind of ruining a little bit of the surprise of what's next, but the channel structure still makes sense historically. You know, whether you're looking at just where we are correlated to and maybe some of the reactionary lows that we're experiencing channels are channels. They still have sort of a lean in one direction, and oftentimes you'll see a lot of volatility as you reach the opposite side of the channel because you're putting pressure on the dominant force, which in this case is more of the bearish side of the market. Now, the question is this model still relevant? Do we still want to be using it? And where are we now? Because back then, the idea was simple. If we reject the 200, we're likely to come back in. Maybe we come back in halfway. That 390 was about a 61.8% retracement on the fib move. You know, it's a fib retracement from high to low, or from low to high. And at worst case, we give it all back. You know, we basically collapse the price. Obviously, that did occur. So the question is, what's next? Can we continue to use this model? And if so, what does the model tell us? Well, if we zoom in here, and we'll assume that we're looking at the June low and the fact that we just tested it. Obviously, you don't really know what the test is going to look like. It could break. It could basically bounce immediately. It could have these false low kind of attempts. Ultimately, you don't know until you get there. But what happens during this time back in 2008? Couple of things to note before I get into it. We're looking at the lows back in January of 2008 and the lows back in March. It was structurally a double bottom low. So little dissimilar from what we have today. And this was noted historically when we looked at the rejection of the 200. You know, instead of a double bottom, we have more of a higher low, more of a 1, 2, 3 corrective move back to the upside, if you're familiar with that structure. However, it's an important level because it's the level that was established before we rejected the 200. So it's the equivalent price that needs to be modeled after, hence its importance. When we look at what happened back in 2008, it took approximately from this March mid-month low till about May mid-month to get from high to low, about 2 months of upside. Not dissimilar to what we just saw, June to about August, about 2 months of upside, basically a bias towards the longs. We reject. Now our bias changes. We're looking more downside. And this downside did occur fairly quickly, but not dissimilar from 2008. From that mid-August high, we're looking at the low being retested in the beginning of October. So about a month and a half to go from high to low. The speed of the downside tends to be faster, even though the price is approximately equivalent, you know, the price movement, not necessarily the percentage drawdown. And once again, just looking at 2008, mid-May, all the way to about mid-July. So about 2 months back in 2008 took a little bit longer, even though obviously the downside here is similar. And here we can look at things like percentage drawdown. So if we're looking at high to low drawdown, it's about 17%. Ever since we rejected the 200, that's what it's felt like to hold positions or even new positions that are now experiencing pressure and pain to the downside. Similar to 2008, I'll actually just anchor it to those lows. The drawdown was not even the same. It was a different percentage drawdown, about 13%. But what you'll see is as we kind of move forward, this wasn't really the low. We did draw down a little bit further before seeing that mean reversion or that risk reversal, usually back to your moving averages. The idea of things getting a little too parabolic, a little too extended, and then that snapback, that move back to simply moving average resistance, and usually it's going to be somewhere mid-range. So as we kind of look at these levels, one thing to ask ourselves is, are we truly at a floor level that we can trust? Based on 2008, while the drawdown was not the same at those levels, as we extend this trend line out, we'll notice that from high to low, when the low was actually established, it was about 17%. So the question then becomes, do we trust the percentage drawdown, or do we trust the level? Is there a way to have both be viable? Usually this is going to be in the form of risk reversal structures in the option market, something with defined downside risk, and in the case of a bounce, at least some targeted upside approach, being able to capture the bounce. Now, let's kind of move this forward a little bit. This is where we currently are located relative to price. It's also important to note the differences. Obviously, the lows are a little different. The month of when this is occurring is a little different. The seasonality is important as well. We're entering into historically what is often a more bullish period for the S&Ps. I won't just say the market, I'll say specifically the S&Ps. And as we've seen with seasonality, that can actually counter a lot of dominant forces in the market. A lot of risk can be abated simply because of sector rotation and new allocations going into assets, even if ultimately that does eventually come down and make fresh lows. So there are some notable differences here. But as we move this forward, I want to start to note what happens next. And this is what's really important for a lot of the future projections of what could happen to price in the S&P. Obviously, this market is a bit extended. There are things that you can pull up like RSI or MACD. And looking historically, the market cycled back in that period. We cycled things like momentum and started to diverge on price versus momentum. Lower highs in MACD versus higher highs in the daily price. Obviously, the full cycle back down and really not seeing a price low until we saw a momentum low. So a full overall cycle. I would argue the RSI may be a little bit harder to determine, probably an equivalent high, even with a higher high in price. And then once again, the oversold readings. So are these similar to what we have today? If I can load my studies. The answer is somewhat. Let me just pull up MACD and RSI. So do we really have MACD divergence? Not really. I would argue that we just cycled from low to high. Did we see a full cycle in the MACD? Yes, we did. So if we see similar sort of V-bottom approaches, possibly the MACD is coming into an inflection point, a point where the momentum can change relative to price. Did the RSI diverge? No, it actually didn't. We saw higher highs in the RSI and higher highs in the price. The thing that's important though is we got overextended or overbought in the RSI readings. And then of course our full cycle back to oversold. This is why we can claim these conditions. Ultimately, it doesn't really matter what indicator you're using, but you can claim certain characteristics based on an indicator of your choosing. Not necessarily that price is overbought or oversold, but based on RSI, that is true. And usually 70 and 30 are sort of your inflection levels, along with the MACD cycling through highs and lows. You often want to be looking relative to previous cycles, more of a comparative analysis as opposed to an oscillator. So these equivalent conditions are starting to become felt and seen. We're certainly seeing the initial readings that are needed to bounce this market, albeit we're looking to see how high and how far this bounce can go. One thing that's notable here is you'll notice that I left 390 on the chart, mostly because I forgot to take it off. But as we start to look at things like fib, you can do a similar analysis here. If we saw an impactful low yesterday, something that matters, what are some targets for bounces? I would probably just derive some of the upside targets based on fib retracements because it's a full cycle. If we're trusting the fact that this market went high to low, this bounce should have some fib target clarity in its recovery. And from there, we'll assess whether to be long or short biased into new momentum. The idea that the market will probably need to bounce first before seeing another sell swing. It's arguable whether it's occurring here yesterday at these prices or similar to 2008. Are we going to see a little bit more downside? You can kind of tell that we look similar here. There even was a pretty strong intraday session embedded in this chart. And then we gave it all back. So for today's trading, understand that based on our model, we can literally give it all back today and then some, because the next couple of days sold off a bit more. So just understand we're at lows, we're at support, we're at weekly 200 period moving average. That's all fine. Price is responding to it. But understand that the give back could be based on a little bit more pain. Remember, this channel approach has been sort of the dominant factor for marking highs and lows. And I would argue that the cues are not dissimilar. They're definitely at support horizontally, but are they truly at the absolute lows? Based on our recent sell swings, the answer is no. In fact, we see a little bit more pain before we see relief. And that's just something that we're modeling based on what's happened already. It's the channel approach, especially when you have failed breakouts at the highs. These are some of the more dangerous channel moves because the failed extension usually leads to a full retest. Not often, not always, but it is true more often than not. When you're channel trading, understand, failed highs leads to testing lows. It's true with ranges and it's true with channels, regardless of the trend line. So these are some concepts. Now, let's quickly, as we kind of round out today's discussion, and we'll look at this a little bit more tomorrow. I'm not necessarily saying that today is the give back day. Trust the price action today. We are trying to get out of balance. It's a gap up open. Let that gap up open fail to some degree before you really consider being full bearish on today's session. Try not to be too aggressive into the strength. But ultimately, look at what's happened before. If you're modeling off of 2008, we're not necessarily home yet. We have a little bit more pain before we see this recovery. And if that's true, similar to some of the volume readings here, let me kind of clear up the studies now. You want to be looking at the period as we started to test these lows. The volume certainly picked up, but did it really spike to the same levels as the lows that we're referring to? And if we look back in this period here, take off the studies, the question is, are we seeing the same volume readings? We're close. We're almost home. It's not quite the same. So unfortunately, whenever you have divergence, you have to question whether you can fully trust it, whether you can step in and just say that low is the low. Can I trust it completely, or does it have to break one more time before I can see that follow through? Remember to be careful in these moments. And it's important to understand that usually confirmation comes in the highest risk environments. The highest risk sets up the highest reward, but you have to be careful stepping into it. Sometimes you have to be define risk. Sometimes you have to do things that are a little bit more of a scale in to the position, or just understand that if you're basing it on price, the market has a lot of potential to challenge price before moving in your favor. Now, last but not least, little bit of homework, but ultimately you want to do this analysis across other products, not just the S&P. As we know, bonds are important. Rates are important. As we're looking at TLT today, we're in a downside move. We're scraping the bottom. Bonds didn't quite look like that back in time. If we're looking at the same date relative to the lows that we're discussing, it's approximately mid-July, somewhere in this region. Obviously, the chart looks a little different. And as we see, there is the event of the crisis itself, which does something very impactful to the bond market. Rates had to essentially plummet to, counter some of the fear and the move into bonds. Obviously, it was more of a fear trade back then, with the bonds ripping to the upside. You also want to maybe look at volatility. Once again, little homework, but volatility has some similarities. Calculations should be updated relative to 2014 changes. But back in 08, if we look at some of the volatility readings as we were testing recent lows, those March lows back in July, volatility was elevated, but it wasn't spiking outside of the norm. We were hitting things like resistance and inflection levels that are not dissimilar to what we have today, albeit we did hit resistance on this last sell swing. So understand that if we're modeling the bounce, we should be seeing volatility do something similar as well, coming back into those lows, cresting back down to about the 20 levels. And obviously, what happens later is the crisis. This is what people are scared of and concerned with. And then, of course, one of our last risk elements, the dollar. This is something we've seen abate recently. It's more of a risk reversal after a parabolic move. But once again, the chart and the pressure on the marketplace was dissimilar compared to what we have today. The dollar wasn't ripping back in July of 08. The dollar wasn't even a factor back then, but it became one. As the market started to slide further, the dollar started to rally. And unlike today, where we're seeing explosive moves in the dollar, very elevated readings overall, and potentially some topping behavior, which we'll talk about hopefully once it confirms, this is what we're not necessarily aligned to. There are some differences here, and especially when you're referencing the same anchored price and time. So yes, the risks are different. Yes, the market is different. Yes, the economy is different. There's always differences. You're trying to find something that aligns relative to your trade. You're trying to find similarities and differences that confirm or don't confirm your thesis. And ultimately, those divergences and confluences or convergences help. They allow you to trade with some sort of plan. So as we kind of round out today, do your homework a little bit here. Pull up similar charts, look at these confluences, and see if you can take advantage in the next couple of trading weeks, months, possibly years, as we start to move into these new levels. Whether the marketplace wants to crest lower or whether we're seeing a more impactful bottom today and yesterday, well, obviously time will tell, but we do have a model, and that model has not quite yet broken. So we're going to keep using it until it doesn't work. So with all that said, my name is Jared. This is Engineering the Market. We'll cover a little bit more tomorrow, so stay tuned. And as always, stay tuned for Pre-Market Prep.
Good morning, everyone. Welcome to Pre-Market Prep. I hope everyone's having an amazing morning. Hopefully, you guys had an incredible day yesterday to start the week. Good morning, Norm. How are you doing today?
Good morning, brother. I'm all right. I'm sick. I'm getting sick. Bear
Oh
with
no.
me. I may not be 100%, so it's all right.
Sorry to hear that, man.
It's all
Yep. Hope you get it better sooner. Shake it off. And yeah, man, it always sucks to come down with something. All right, guys, let's take a look at what we had yesterday. It was definitely nevertheless an interesting day. We'll skip the spy for now. No, we'll talk about that in just a second. I want to show you my watch list that we had yesterday. We had Oxy on deck. We'll look at our 5 minute here. Let's zoom into that action. We had Oxy, we had a PBR, Tesla, and Apple. Starting with Oxy here, I mean, it was very active pre-market. Wasn't clean though at the bell. At the bell, you did get a move up here, but wasn't really a clean one. So I didn't pay too much attention based on everything else that was going on. That was so much cleaner, like a Tesla and Neo. We'll look at that in a second. PBR was the second one on our list. This one actually not horrible, but not great, right? And I'm comparing it to other stuff that we had on deck that were trading so much better. But here you had some pretty nice plays based off this level, this high of the pre-market. It broke that before the market opened, created a new pre-market high here. I didn't mark this, but created a new pre-market high here. And you can see how beautiful this thing trades within these levels. And then another breakout. You don't get quite the continuation, but still it did okay, right? Not bad for PBR especially. Here was Tesla, guys. I mean, this was the one that many of you guys took incredible advantage of. So great job there. Just the weakness on the breakdown here that we saw at the market open, just insane. And then the follow through, right? Sometimes you get the great move, but you don't get a follow through like you did on Tesla so early on. So you can see here that just the beautiful drop there. And then here we have Apple. Apple was amazing, a lot of strength. Pre-market action, Apple, AMD, and I believe it was Nvidia as well, were all very strong. They were all in the red, made it to the green pre-market, and then after the bell, they had a little bit of a shuffle here, a little bit of indecision, but then it just took off here, man. It just never looked back. Beautiful play, Apple on Apple. AMD was the same. Again, nice little pop there. I didn't look at Nvidia. What did Nvidia do? Similar move, but not as clean as AMD and Apple for sure. And then Neo. Neo was a nice weak one, very similar to Tesla as well. Got a little bit of the start of the drop here in the pre-market, and then at the market open, just a flush coming in right into 1530. So that was pretty nice as well. A lot of moves you could have traded yesterday, and there's some other ones we're not going to go over all of them this morning. So that's what we had yesterday. Let's talk a little bit about what we have on our gappers list this morning. Only one in the red, KALV. Looks to be a lower size flow at 20 million, down 51%. We'll dig into that. And then we got a couple of low flows leading the way this morning. We have ATXI and also NBX. So we'll see what's happening there. FNGR is up 20% again today. This was the one, if you guys remember, that was possible for a low flow, and I think some of you guys did look at this. It got halted a couple of times. I believe was it Walcott? I forgot who was it that took this trade, but some of you guys took this trade here on finger motion. Yeah, so let's get over to the market pulse, see what's happening for today as we get going.
Yeah, had a big bounce yesterday. Not too surprising considering we'd come down to the 200 on the weekly. It bounced right off that. Up again, pretty big this morning, at least for the moment. About 1.5 on the, well, 1.5 exactly on the SPY, 1.8% on the Qs. A couple underlying things going on. That Credit Suisse deal, concerning some breakage possible. The UN came out and warned against further rate hikes globally, causing a massive global recession, potentially drastically affecting Asian countries, ex-China, developing countries over there and such. So, people are thinking possibly, and I'm not saying this is the case, but the Fed might be closer to an end of rate hikes than people had anticipated. We'll just have to see how that plays out. I'm not gonna venture to guess on that. That's kind of a fool's game. But we do have a bunch of Fed speakers. I think there's 3 sprinkled out through today. The times, let's see here. I know there was one earlier. Cleveland Fed President, 7:15, and then Fed Governor 11:45, 1 p.m. San Francisco Fed president. So got those going on. Jolts at 10 o'clock, factory orders, and capital core goods orders revision. That Jolts number will give some data on jobs. That's job openings and labor turnover survey. So we'll get a feel of how that goes. And yeah, let's see how it goes today.
Yeah, should be interesting. See how that is gonna affect some of these market moves that we're seeing. All right, guys, let's get into our gappers list this morning. We're gonna remove what we had here yesterday. Control A, Control X is gonna take care of that. And let's start here with what's actually still capping down. Let's get rid of this one here. KALV is down 51%. This thing closed at 14.24 yesterday. Today, hanging around $7. So what's the latest and greatest on this one?
Lower float biotech had a drug in trial that it halted the trial on. So
yeah, that is never good. The one thing I don't like about this one right now is just the volume, guys. Only 151,000. I mean, that's not going to cut it. Hopefully, it can get more
that's
volume.
Anemic.
Yeah, exactly. It's not good at all. So that needs to pick up. That needs to pick up big time. Let's come back to it a little bit later. Let's look at as what's capping up, leading the way. ATXI 40% up this morning, 755,000 shares float. So very, very low float. The pre-market action looks very active. Daily is just all over the place here, guys. We got some pops and some drops. Yesterday we gapped up, so we're able to pop up and then sell off nicely. I don't know, man. I have not looked at this enough. It looks like it's been in play for a couple of days here, though. Doing whatever it's doing.
No. Low float, man. I mean, like
Yeah.
micro float, nothing there. I don't
Yeah.
see any fresh news on it this morning. Yesterday, there was news of appointing a new CEO or something. I just don't see anything here that's worthwhile that you could possibly manage risk on appropriately.
Yeah. Guys, very careful with these, especially if you're a new trader. I know this looks attractive, going from 12 to 16, going from 7 to 10. But sometimes, the risk on it is not worth the play. So be careful with this one. As I mentioned, microflow. So we'll stay away from this. INBX here, 25 million shares flow. This one doesn't, again, just another one without volume. So no volume here at all, up 37%, but doesn't mean a whole lot without the volume. I'm going to skip on it for now. If it can get volume, maybe it can be something. But at the moment, just don't see anything worth watching.
I will say this. Let me see something real quick. They did just have news come out half an hour ago.
Oh, okay.
Now, this is a biotech possible accelerated approval for a treatment that they have. That having been said, as you mentioned, the volume is terrible. Move. I don't.
Yeah.
The spread is nasty. No redeeming qualities here.
Yeah, and 30 minutes is enough time for people if they really like that catalyst. Should have done something by now, at least volume wise. But so careful on that one as well. Volume is key, guys. Very, very important for these type of. It's important on any stock the way we trade, but on these lower flow stocks is even more crucial. Finger motion, FNGR, they were active yesterday and they actually halted. I think at least I saw 2 halts on it. I wasn't really paying too close attention just based on what you guys were doing in the chat room. And some of you guys took a couple of trades on this one. Active again today, up another 21%. Norm, what's the news? Remind us again, what's the deal with this one? They seem to be really crushing it here. I know they started last week, looks like. And then Friday they had a big day. Again, penny stock though. See, we really wouldn't be looking at this price range though, but it's making some noise. That's for sure.
News is non-existent from what I can tell.
That is scary. If the news is not sticking out everywhere,
when you see news stories that say there is no news on why this moved like this, that's concerning.
Very concerning. Very concerning. So again, there are ways to trade this. I saw you guys scalp this. So if you have the experience, if you're an experienced trader, this could be an opportunity there. But if you're not, or you're struggling, this is one you want to stay away from, right? It can be too risky. Oh, of course. How can I forget? I mean, can we even pull it up anymore? I mean, probably on a weekly. Yeah, no. Look at this right here.
It is.
On a weekly. This is one day, by the way, guys.
Similar situation on Hunt. where, it started moving. Was it one day or no? I think it was 1 or 2 days.
It was
But
1 or 2 days, but there was one day where it went from like
it was a
40 to like
Oh
100.
yeah.
Yeah.
Well, it was $10 and it went up, and there was news, and it said there is the news is that nobody can find any news. And then the next day it went to $95, I think, and halted,
Yeah.
and it
Yeah.
never came off halt.
Yeah. Yeah.
Delisted, whatever. So, that's what concerns me when I see articles that literally say the people that are in the business of writing financial articles about things going on in companies say they can't find any news. That's what it makes me think of.
That is no good. Very, very careful, guys, with stuff like that. Let's head on down here. We have Posh, POSH. This one is up
It's a buyout.
13.5. Oh, that's horrible catalyst. So nothing to see there. Rivian on deck this morning, up 7.4, 447,000. This was active some time ago, and we took advantage of it. But when the EVs were really in play, and then later down a few months ago, they came back up with some news again. I'm not sure if there's any great catalysts today, but
Yes, there is.
there is. Okay, what do we got going
At the
on?
beginning of the month, all the car companies announced how many sales they had for the previous month. Their sales were up bigly, and they're on target to meet their goal for the year. So that's what's popping them up this morning. I think they
So
were up
the
60 some
opposite
odd
of
percent.
mhm,
Yeah.
opposite of a Tesla here. So yeah, they're doing pretty nice this morning, guys. Up nicely here, 7.3. Volume's got to get a little bit better, so we'll give them a little bit more time on the volume here. We'll put them on deck for now, see what happens there. Carvana is up 5.1. I don't like the way this one trades. I think it can be very spotty at times, very light volume. 5.1 this morning. Normal, unless there's any significant news, I'm probably going to pass on this one. We do have Mara here, which I'm not a big fan of. This is starting to make a lot of noise like it did before this stretch here, right? When it had this stretch, it was fun. You got a lot of moves. Now it's just starting to gap up and down, but not really moved in the intraday very well. So you see here on the daily how small the candlesticks are compared to what we saw here. So I'm not too interested on that today. PHG, horrible. Looks foreign, no pre-market activity. Skip on that one. UPST doesn't trade very well. I'm not a big fan of it. Up 4.1, 121,000. Only when there's serious news on it is it worth trading. But for the most part, I don't see anything great, even with volume this morning. All right, we got a lot here, guys. We're not going to be able to get through all of this because it's a ton. But towards the bottom, we got a lot of our favorite tickers. We have XBEV could be interesting here as well. So XBEV is a good possible. I think NIO and Tesla are going to be two that I want to see as well. Going to definitely Tesla after yesterday's madness. Already up 2.9, great volume. This will be in play again today. And if you guys remember yesterday, how wild this thing can be, just be very careful with the share sizing, right? You don't need to take a lot of shares, guys, on this one. When it wants to move, you can make a decent amount with a small size or a decent size. Don't go overboard. We have here NIO. I want to take a look at NIO as well. Yesterday had a nice drop there. We'll see what that brings this morning. And then towards the bottom, let's see AMD. AMD looks good, getting a nice bounce here. I think AMD is worth watching. And let's see what Nvidia is doing today. Nvidia could be a good secondary as well. And I think I'm going to stop it there, guys. There's a lot going on here this morning. We'll stop here. We won't be able to get through all of it that it's on our watch list. A lot of it's not great, though. A lot of it's just moving with the overall market, but not really looking all that exciting. All right, let's get to you, Norm. What do you like this morning?
I mean, there's plenty that we've already. I like what's on the list here.
Yeah.
I don't need to go further than that today.
Agree. And some of these were great yesterday that can be set up nicely for a secondary play today. Let's take it to.
Will be fantastic today. We'll see.
I agree, man. I agree 100%. I missed the drop yesterday. I was in NIO. I mean the drop yesterday was in NIO, and yeah, we'll see today, man. I'll be definitely a focus on that.
While it was dropping, Kathy Wood was sucking up 100,000 shares, 150,000 shares, I think, yesterday. She got for ARK.
Wow. Very, very interesting. Let's take it to the room, guys. What do you guys like this morning? Brian, you have Rivian. Yeah, Rivian is on deck. I like them today. As Norm mentioned, they got some good positive news. Apple, Apple's one of our usual suspects that also can do very well. Gapping up is 1.7, great volume already. I I'm gonna put I'll put Apple here. I was gonna put as a possible to see if there's anything else that I can add to the list, but it does look good, and it traded so good yesterday. One of the cleaner stocks as well on the list. What do we have here? Oxy. Oxy was not great yesterday. Not saying that it won't be today, but it was just a little bit choppy compared to everything else that we had on deck. Today they're up 2.2. This is a great pre-market action for them, by the way. They're a nicey ticker. They don't move a whole lot pre-market, but this is pretty decent this morning. I like when they're doing well, they trade very well. I'm going to put them as a possible for now. Heading down, Cbish, Oxy. Yeah, I got Oxy on deck, so that's good. Gapped up above the daily at 50. Yeah, Christian. Oxy is good. It's just how is it going to trade the market open, right? And you can tell really quickly on Oxy if you're going to be a choppy or not. So let's see. Is this an ETF? SOX S? Yeah. So you could play the ETFs as well. I usually do not put these on my list, but we're aware of a lot of the ETFs, TQQs, and so forth, SPY, and all that good stuff that you can play in these type of market conditions. But I won't add them to our list. I usually try to stick to just actual companies for the list here. But there's plenty of ETFs that you can look at and possibly trade. Here's Meta. How did Meta do yesterday? I know some of you guys were watching it. I didn't pay too much attention to it. A little bit of a pop. Doesn't look like it was too clean compared to like an Apple, Nvidia, or AMD. But definitely active somewhat there yesterday. Later in the parts of the day, though, if you're trading later in the afternoon, this was real nice. This was very, very clean here. So possible, and just keep in mind that stocks, it can be choppy the first half of the day, and look how beautiful it gets a little bit later when it comes to Meta and any stock. That's a possibility. Nvidia and AMD both daily. You have the same base building up here, right around 125 for all of these tickers. Nvidia, AMD is the same thing, right? We had this drop for the last couple of weeks. It's just insane. So you're kind of getting the same nice daily here for a possible breakout. We'll see. Had a great day yesterday. Let's see if that's the start of some kind of continuation today. I'm not saying a reversal on the market. I'm not saying that, but maybe some kind of continuation upwards. Lightspeed, what is this? LSPD. No. This is only 527 shares traded today. So this is not in play. No good. There's nothing Lightspeed about that at all this morning. So let's see. Anything else, guys? You guys like today? Okay, pretty good. I have a good list. I'm happy with the list we have now. If anything else comes up, we can come back to it, guys. Give me, you can throw it back out here. I do see Baba and Snap. No one mentioned those. Let's take a look at Baba. Baba could be interesting today. I'll put Baba on deck. They're not gapping up as much as I would like, but Baba could be interesting today. And if we look at Snap, anything good there? No, volume is way too light for Snap. Last one, and we'll head over to announcements, is Pixie. No. This is horrible. No. Plaxton, the reason is there's just no volume, right? And look at the dailies, really all over the place as well. So it's not a great intraday ticker to begin with, and they really get no volume whatsoever. Like here, these are probably 100 shares being traded here. So it's very, very light volume. Not a good one. Unless any news breaks out and it changes the way it's trading, I don't see anything great happening there. Amazon actually does look good, up 3% this morning. I do like the pop we're getting here. Decent volume. Yeah, Amazon could be added to this list. ABC there. So Amazon, we'll put that there. Excellent. All right, guys, let's take it over to our community events and announcements. You can always check that over on our website, variabletraders.com. And if you come over here and you click on webinars, it's going to give you everything coming up for the next 2 weeks.
Absolutely. Just a reminder, every Monday night, 8 p.m. Eastern, you've got Onboarding with Carlos. Mike's there to help out as well, so check that out, especially for newer members, newer traders. Tuesdays for strategy. Tonight, you've got Peter, 8 p.m. Eastern, talking about advanced risk management. Then the following week, next Tuesday, 8 p.m., Doors Volume Price Analysis, The Win. Wednesday is for psychology. This week we have Dr. Kenneth Reed talking about bear market psychology as part 2. Don't get fooled again. Next week, 5 p.m. on Wednesday. Note the special time because she's in Europe. Discovering your inner demons through self-reflection. Thursdays is for mentorship here at Variable Traders. 11 a.m. You've got John. 4 p.m. with Ed. Next week. He should have some some aftermarket earnings to be able to trade again for that. And then 8 p.m. with Thor. Don't forget about tradingterminal.com and stocktradingsimulator.com. Stocktradingsimulator.com. You can go 24 hours a day, 7 days a week to hone your trading skills for free with our web-based replay simulator. And here is our awesome new trading terminal that is continually being updated. Go there for the scanners. You get free scanners. You can see them right there on the left, our gap list that we use to create our watch list for the show. All right. If you are watching on YouTube and you haven't been in the room, you'd like to give it a shot, you can do so with no obligation, a 1-week trial. It is a one-time payment, does not recur. Use the promo code PreMarket24 to get a discount on that. 7 calendar days, 5 trading days in the room. And if you'd like to become an elite member to gain access to all the webinars and mentoring sessions I just mentioned, use the promo code READ50 to get half off and a free one-on-one coaching session.
All right. Thank you very much, Norm. All right, guys, let's get to it here. Our list right now made up of Rivian, Tesla, AMD, Apple, Baba, and Amazon. Yeah. Norm?
I was just going to say, Phil says, how do you get the stock section in the scanner? I only see commodities, futures, etc. Are you talking about on Trading Terminal? I don't see any of those things. On the left-hand side, click scanner.
Mm-hmm. Right here.
And it'll pull it up.
Yeah.
You're probably in the overview. You got to click the scanners on the left. All right.
Yeah. Click this and you'll get this. And the ones that are not populated now is obviously because the market's not open. Those will populate when the market is open or when we have a halt or something like that. Cool. All right, guys, let's take a look here. Amazon. Ripping nicely here. So I have this on deck. So that's going to be looking very nice this morning. As you can see here, our possibles list, Oxy, Nvidia, XPEV, Neo, and Meta as well. So then we have our low flow that could do something. Not doing a whole lot right now, but could get going later today, hopefully. Down 51%. And we'll see how that is going to play out at the market open. Let's start with Rivian. Let's get some levels in here. At the moment, we do have our high of our pre-market is over here at a 35.05. So we will slam a level there towards the bottom. Our pre-market low is at 33.90. But we do have this nice level here within the pre-market that we've been testing already. This is our highs from 2 days ago. This would have been Friday. So this day here, you got the high there, which you do have a couple of areas of support and resistance around that level. So that's actually going to be probably a little bit more important than this single previous day close here hanging out on its own. So keep an eye on that for sure. And then towards the top, if we were to break out, though, we're up 7.2, but selling down a little bit from the highs of the pre-market at 35.05. If we were to come back up and break out here, we do have some levels here at 36. And we also have one over here at 37. They're pretty far out, but again, they got some really good positive news today that can definitely get this thing going. Towards the bottom, I'm not going to really add anything. You do have your highs and lows of the last 2 trading days. Maybe in between here, you could put a minor area of support and resistance. You don't have a whole lot there. It's around the 30, looks to be 33, 35. Again, just a couple of days opening, closing right around there, but not a big level like this 33. This 33, you can see right on there, you got a lot of resistance. There's been a lot of play, a lot of action between these 2 levels there. Those are main levels, especially that previous day close hanging out at 31.89. So let's see how this plays out. Again, up 7.1, decent volume. I hope that can pick up when the bell rings. Here is Tesla, guys. This is the one that's going to be on probably everybody's watch list, except Eamon, because Eamon trades a little bit different than a lot of us do. So we're looking forward to see what his watch list looks like today. 255.36, high of the pre-market, low of the pre-market, 246.87. You got a nice window there. Again, within the action of yesterday where we dropped nicely from 254 to about 240 or so. So again, big move there, gapping up 3% this morning. The volume already insane at 2.1. So I'm looking forward to see how that's going to play out. Outside of what we just marked here, we're in the midpoint from yesterday. Outside of that, we do have your highs and lows towards the top, and I'm not going to worry about marking anything below the previous day close right now unless we actually start breaking down from there. If we do, we'll head over to the left and we'll pick up some levels from here. But right now, I think we're pretty set with what we have at the moment within the daily action from yesterday. Let's take a look at AMD. Great move yesterday as well, alongside Apple and Nvidia. High of the pre-market this morning, we were looking at 68.29. So we will slam a level right there, 68.30 to be exact. And you can see on the daily, you got a lot of resistance here as well. So that has been an area where AMD has struggled to get above in the past. 69.18, a good level as well there off the daily. Not a whole lot of touches on that one, unless we go to the left. Maybe there might be some touches here, but it's been a while since we've been hanging out at this level, as you can see on the daily there. So towards the top, if we were to really get going, the next level will be 74. Again, I don't see that happening. You need a whole lot of power to get that going there. A lot of juice this morning. So Apple, great trade yesterday. This thing got going very early on. Trended nicely the entire day, so this was very nice to see. Low of the pre-market 144.02. Our highs are 145.56. And then towards the top here, we do have a slight level here over at 146.76, and then all the way up here at 150. Around 150, got a nice level there. Good area support before we broke down from that on a gap down day there. So those are two nice levels towards the top above your pre-market high. Towards the bottom, you got previous day close. Highs and lows for the last two trading days are doing a pretty good job. They got you covered there. So do not need to add anything else. Actually, I take that back. This one here could be okay if we were to lose the previous day close, 140.73, right? That could be an area. Let's look at BABA. So BABA is going to be interesting. It's gapping up 3%. They don't have great volume right now, which is okay. Usually BABA doesn't put in a whole lot of volume. I like when they're gapping up, and they tend to trade better when they're doing that. Right now, high of the pre-market 82.78. Towards the top, a great level at 85.17, which is not far-fetched for BABA. This thing can move decent as well. And towards the bottom, highs and lows for the last two trading days. So I like what they're sitting at now for either a continuation of this or they're far enough from this area that a breakdown can also be good towards the previous day close. So I really like the way they're looking on the daily at the moment. Let's see how the market open is going to treat them, but I think this can be a real nice one today. Amazon are putting in some good numbers here, up 3.2, 728,000 shares traded so far, so that is nice. High of the pre-market 119.64, the low of the pre-market 117.70. Looking nice there. Between the action, between the highs and lows, you do have a 118 here. I'm going to mark that there because you do have a lot of touches on that 118.64. If you draw a line across the board, it's kind of like smack in the middle of the high and low of the pre-market this morning. But you can see some action there, some support, some resistance, more resistance happening here. And even in the pre-market, you're kind of respecting this area, this 118.64. So definitely want to have that on deck. I think that could play an important part if we do decide to drop down there. Above the pre-market highs on the daily, let's get some good areas. Clearly, this is the big level here, this 124. So we'll slam a level there. And then you have this one at 122.28. Couple of days opening and closing right around that area, 122.28. That could be interesting if we get into a nice move upwards. Secondary list looking good right now. Oxy could be interesting, man. I see Oxy here. They're trying to get above this pre-market high at 160, 65, 64. But that area, aside from it being a pre-market high, you got a lot of resistance happening here in the past. So that could be interesting. I'll keep an eye on that. But if it trades like yesterday, man, it was so bad. It was so choppy. It was definitely not great. All right, let's see here. We do have XPEF. XPEF is also on the deck. We have NEO. This was my trade yesterday, so that was a nice one. Let's see if it does anything today. Pre-market just sideways, not really doing a whole lot, but we're up 2.7. So we'll keep a close eye on that one. And we have Meta as well. Got really nice later half of the day. Traded very clean. The first half was a little bit messy. Not even the first half, like the first hour or two. And then from there, you can see how clean it did started trading after that. All right, excellent, guys. We are all set. Any questions? We're done a little bit early today. We can cover a few things before we get to our moderators list, give them an opportunity to put things together. Let's see here. Hey Carlos, can you go back to AMD's levels? Yeah, we can, absolutely. Let's go back to AMD. Here's AMD. So again, AMD, Nvidia, and Apple, they all have very similar daily, which is, if you pull up the SPY, it's probably gonna look exactly the same, right? Because that's all they've been doing, just following the overall market and the cues. So on the levels here, you have I really added just what, 3 levels. Your pre-market high, because your low is basically 67 highs from yesterday. Your pre-market high is sitting at 68.30, and then we added this area here, 69.18, and then all the way up here at 74. Now what we really should do is go in here, but I'm not gonna go back to this day and see if there's any areas of consolidation that happen within AMD during this day, and those could be levels you can use as well if we're going to rip into this area here. Now, what I would do is, instead of going all the way back, you can also just look at the whole dollar numbers. That's going to play an important part. It usually does when there's not a level that's that's sticking out the way it is, like this one on here, right? It's a very clear level. You're not going to have that in this stretch over here on AMD. All right, excellent, guys. Nvidia, decent pop. Let's check Nvidia. What do we have? Yeah, no, nice pop today, up 2.8. Better volume than yesterday, I want to say. I don't recall what the pre-market volume was yesterday, but it looks nicer as far as volume. But you got a lot of these this morning where they're breaking out. You got Amazon, you got even Baba looking to break out here. Apple, not quite, trying to get to the pre-market high again. AMD, same thing here. And then Tesla's the one that we're going to be paying very close attention to. Price action on Tesla now, right here, there's 250. You could mark this as well. In the pre-market, you can see how we're flirting with that already. Resistance, support, back at it again. So at 250, definitely mark that down. So it's almost midpoint between your highs and low of your pre-market. I think it's worth having that on there. Excellent. All right, guys, looking good here. Let me scroll up on our gappers list here. Remember, guys, on YouTube and on our members, if you're new, you can always find the gappers list here on tradingterminal.com. So head over to tradingterminal.com, click on the scanner, and you can see the gap up list that I'm working off right now. So you can see the stuff that we went through this morning. Scroll down, see what else is on this list as well. Got a lot, and this list is climbing quite a bit as we're starting to get more volume. Wow, Lucid. When was the last time we looked at Lucid? But yeah, a lot on here. BBBY, BA. I mean, everything, guys. A lot of green in the screen. Besides our lonely buddy over here, KALV, down 50%. Again, just the volume is not there. You could get that from right here. We need a lot more volume than this. And hopefully we can get that the market open. And you also have the float. So your float information is going to be here as well. So definitely check it out, tradingterminal.com, scanners, and you can pull up all that information absolutely for free. So someone mentioned Coin on YouTube. So let's take a look at Coin. Let's see what's happening there. Looks better than Mara on the daily as well. Yeah, could be something breaking out of 68. I just haven't had any luck with Mara, Coin, or any of the other Bitcoin tickers. Again, I feel that we went through a really nice stretch between July and September. If you look at Riot, looked very nice. If you look at Mara, also looks, again, this July and September, we did really, really good, especially July, August. So really nice stuff there. We're not seeing that again. We're back to lower volume of trading, looks like, and it's not doing these spikes that we were getting before. So unless Mara's doing that, I'm not really interested in it, because even if it's gapping up or down, I noticed the intraday action is just horrible, right? Again, just based on the way I trade, the way I see it, I think you can find better opportunities. What's the other one I'm thinking about? Is Riot, Mara, and there's another one, Coin. I think that's it, actually. I think those are the 3 main ones that we usually take a look at. Huge volume settlement candle on Nvidia a few minutes ago. Yeah, it really jacked up. Yeah, I hate when that happens. When you get the candle that messes up your moving averages. But yeah. All right, guys. Any questions? Anything that we might have missed? How much volume are you looking for, Carlos? Jose, it depends. There's not a set answer to that, and the reason for that is because every stock is different. So, for example, we'll take the big one that we look at always is Apple. right? So if you look at Apple, if I have 500,000 shares traded on Apple, that's okay. If I have 1.1, 1.7, 1.9, that's decent. That's great volume for Apple. If we look at something like Rivian, 600,000, Rivian is actually starting to get going here nicely. This is great volume for Rivian, right? You don't expect that type of volume on Rivian, right? So anything like 500,000 on stocks that don't get that much volume, that is what I want to see, right? So Rivian 600,000, that is excellent. Yeah, I agree. That's excellent volume, right? That's what I'm looking for. And you can get technical. You can start looking at relative volume. You can start looking at the average volume. I think sometimes like the ATR, for example, and the average volume could sometimes be a little bit misleading. And the reason for that is because you could have a stock that the ATR is horrible, has not been doing anything, but today they have news, right? Today they have news. So that ATR is not really going to mean a whole lot when your ATR is $1, right? But the stock today is already in the pre-markets moved $3 or $4 or $5, right? So you got to be a little bit careful with that. I mean, there is some use to it, but this is why I don't use as far as building our watch list, right? There is some use to it. So that's what I'm looking for. We're looking for things to get going. And then take a look at example like a KALV, excuse me. This is a low flow stock, right? So the flow here is, what is this? What was this low flow right here? 20 million shares. So I want to see millions of shares on this thing. $224 is not going to cut. And the reason for that is because it can move very wild. So I want to see a lot of shares on low floats, and I want to see a great clean pre-market activity. And I want to see some action at the market open, right? So if this thing even had like 700,000, that's not going to be great. You want to see a lot of movement in here. So it depends also on the float that you're looking at, right? Again, that's a quick answer. We could do a whole webinar to get into a lot more detail, but that's kind of like the quick overview of what we're looking for when we're building this watch list. What period do we set? Saying do you have for average volume line down here? I don't even know what we have down here for. I'm not sure what the average volume is. I have whatever the default is on that. Does anybody know what that is? Average volume. I'll have to get that for you. But whatever the default is when I downloaded the DAS, 3 is default, Christian. Thanks. So yeah, that's what I have. I don't really, didn't really change that at all. Would I trade? No, I would not trade that thing. I would not trade this, man. I didn't even pull it up, and I knew already where you were going. This Levi, no, I would not trade this. Look at yesterday though. Yesterday it did move. It moved a bit here, but yeah, this is just no. So yeah, I will not trade this. Reminds me a little bit of Ford, another one that again I wouldn't be too inclined to trade. I think there's better opportunities out there. But you will have those days where it actually does something, right? Before we had that, we talked about this before. We had this a stretch here. I mean, this is unlike Ford movement. Over here, we had a stretch where it's actually moving $1, $2, right? Going up to 26 and gapping up like a regular stock in play here. So we have seen some action on Ford in the past. So actually the last couple of weeks, got a nice little drop. I was not around for all of this, but we got nice little drops here on Ford. So I guess the delivery, is it delivery number? What is this? Something happened here where they're just not having a whole lot of fun. To let you know, there is a fake account on Twitter impersonating. Oh yeah. If you guys can help report that. That's a different one. I haven't seen that one yet. Okay. They're aggressive, guys. Just remember, a quick note, no one at BBT, none of the moderators, Andrew, no one is going to ask you to join a special secret society for trading or ask you to send money so they can triple it. Doesn't happen. Nobody's going to ask you to do that on Twitter or any social media. And these guys are aggressive because people fall for this stuff, right? People actually fall for this stuff. So you got to be very careful. Jason says, I love quotes. Yeah. Oh, man. Craziness. All right, guys, waiting for our moderators to kind of throw out our list there. Did they actually copy my picture too? Did they copy? This was actually in vacation here. This is the first time I took my daughter out to the beach, so she was very excited trying to get familiar with the water. But these guys have no shame copying the pictures and all of that. All right. We're all set. Thor's coming in with his watch list. We'll dive into that as soon as we have a little more of the moderators on the list as well. If you haven't done so already, guys, this is a great time to hit that thumbs up over on YouTube. Really appreciate it. It does help the channel quite a bit to keep us going here. So thank you for doing that. We are sitting at 124 likes. We'd love to get over 200, just a few more to get there. It's very, very much appreciated. And any questions we have in the meantime, plug lowered by city group, $28. Let's see, plug. Is plug even that high? They're 22, but they got lowered to 28. Okay. Yeah, there it is. So plug, yeah, I don't know how that's going to play out today. They're gapping up. So maybe they want to get to 28. So gapping up 3.9 this morning. Yeah, it's very, very creepy, man. People just go in there and just kind of take all your pictures and repost them. It's so funny. There's sometimes Andrew's account on Instagram will get completely copied, and then on my phone I'll start getting all these alerts that because I'm tagged in some of the stuff that Andrew has posted. So I'll start getting all these alerts. I'm like, oh, Andrew's active on Twitter, on social media, on Instagram today. When I go look over, is someone that's created a new account, copy and everything, and then it's an easy way to just go report them. But yeah, it's insane. How do we get into the pivot bot? It's Twitter. You sign up on Twitter, right? I think the handle is @PivotAlertBot, and you can get the alerts. And they're also will come up here as well, right? I believe that in the chat you will see them come up. Jason W, it's too late. I already sent my money. Didn't know it was a fake account. Fun. All right, moderators coming in. I have Megan. We have Jared. Let's bring this list over here. 168, almost there, guys. If you could help us out over on Twitter, appreciate it. 168 likes. Let me bring over our moderators watch list. I'm gonna go ahead and resize this here so it can look a lot better. There we go. And we're gonna bring this over and take a look at what our moderators are looking at today. Then we'll recap our list and we hand it over to Brian and the team to take us through the open this morning in our members chat here. All right, so we have Thor. He's looking at the SPY, the Qs, Tesla, and the Pivot Alert Bot. We have Megan looking at Netflix and Tesla this morning. Tesla's going to be on fire, guys. It's going to be a good one today. Jared looking at the overall SPY and Q. Secondary list Rivian, Bob, and possibly some Bitcoin stuff as well. As we wait for the moderators to come in here, we can see there's another one coming up on the gap down list. IMVT. See what's going on there. IMVT. No. That's not looking good at all. Needs a little more stuff happening there. So we'll give that a little bit of more time. All right, let's go over here. Our list this morning. Oh, there's Susan. We'll look at that in a second. We have Rivian, guys. Very, very active all of a sudden here the last couple of minutes. So that is interesting. I like what I'm seeing there. We have Tesla as well, which just Tesla looks like the market is open. Like completely open. Like you can start trading this right now. That's how it looks with the volume, 2.4 million. For those that were asking about volume, right? Tesla gets good volume pre-market, but 2.4 is exceptional volume pre-market. 1.9 million, like they had yesterday, is another exceptional volume for Tesla. So these guys are heavily in place. That's what you want to see. And some of the stuff from watching the stocks over and over again, just kind of get used to what they normally do as far as volume. So a lot of that comes with experience. I don't have a scanner or a book that says, oh, this has excellent volume today. A lot of it comes with over time looking at these same tickers over and over again, right? Because as a trader, if you were to put a list of the tickers that you trade, you're probably gonna have 100 tickers that you have traded more often than the other 5,000 tickers that you have on deck, right? You're not trading a lot of the stuff that's in the market when you're looking for these active plays. So Tesla looking really good. AMD was great yesterday. Looking to see what that's going to do today. Also good volume. Apple 1.2, amazing volume there as well. Beautiful trading day yesterday for them, gapping up nicely. Let's see if that can continue. Bob is interesting. I wish I had a little more volume, but I think that there's some opportunities here for a gap down or a breakout on both sides. You can do that very well. And Amazon also looking very active this morning as well. Going back to our list here, we do have Susan. She has looked at the SPY, Oxy, Tesla, and the secondary list is going to be Apple still looking for what else can pop up here. I struggle to find out if the stock is going to go up or down off the open. Yes, give yourself a little more time. If the bell rings and you still cannot see your strategy being developed, just give yourself a little more time. Let the stock kind of build a story, right? As these cans are building, the stock is telling you what it wants to do. And keep in mind, guys, let's go back to Apple. And I know I'm running a little bit on time here, but this is important. Let's go to Apple here. Look at the market open and trading, and go to trading terminal and go into the simulator and play Apple from yesterday. If you look at this right here, this 5-minute chart, can you tell where the stock is going? No way. You can't tell where the stock is going. You can't tell this is going up. There's nothing here telling you that. Right now, there's some possible buying pressure building up here, right? Eventually, as candles move forward, you start seeing more information. You start gathering more information. You can make a better decision on your process, and then you get the breakout, right? But here, you can't tell what's going to happen. Nobody can tell you this is going to go up or down based on that information. Look what happens next, though. As you build more information, you start to see a very clear trend happening here. And yeah, you might not catch the entry here, but this is not a bad entry. Another consolidation, this is not a bad entry, right? So don't be too fixated on it has to happen at the market open. It doesn't. We have a whole entire day to trade, right? So be mindful of that when, because I know it's how we can get just focusing on trying to make it work, at the market open right away. All right, guys, I ran over my time. I'm going to give it over to Brian. And speaking of Brian, here's his list: Rivian, Tesla, Meta, TQQ, and SQQ for him this morning. And I'm sure he'll be ready to rock and roll in just a second with us here. Guys, thank you so much. Melanie, thank you for joining us in the pre-market show today. Hit that thumbs up. At 186, we're so close to 200. Just 14 more. So if you want to just stop the treadmill for a little bit, hit that thumbs up, or just walk back into the kitchen and hit the thumbs up. Wherever you have your monitor or computer, hit that thumbs up, and we highly appreciate it. Take care, guys. Stay safe. I will see you guys tomorrow morning. Tonight is strategy, 8 p.m. Do not forget that. We'll be on the webinar room. Have a great trading day, guys. Take care.